Hey, do you teach yoga? Have you ever trained to lead yoga classes, to be a yoga therapist? Have you ever owned a yoga studio? Maybe even just wondered what it was like for the women and men up there in front of the room on their mats, leading you through endless Surya Namaskars, down dogs, and pranayamas galore? Well, these are their stories, and mine. I'm Rebecca Sebastian, a 20-year yoga teacher, 10-year yoga therapist, yoga studio owner, and co-founder of a yoga-focused nonprofit. I've done a lot in the yoga world over the last 20 years. Pretty much everything except had a water cooler. You know, a place to share stories, talk about struggles, successes, and find other people who do the same thing that I do. Welcome to Working in Yoga, a podcast and substitute water cooler for yoga folks to connect and build community, to share our unique profession, our challenges, and our journeys with the world.
Hey friends, welcome to Working in Yoga. This week on the podcast, I have my friend Felicia Laab on, and we're discussing protecting yourself and your future. So earlier this year, I did this whole workshop called Make Money Boring Again, which a few people told me they wanted the content, but hated that I used the word boring. And I get that, but as I've gotten older, I have learned that the boring stuff is always the most impactful. It is that moment when something could have gone wrong but didn't because you planned ahead, or something very non-boring happened and you could focus on recovering from that because you had the boring stuff that protects you covered. Now, I'm saying this because this has a little bit to do with the article I wrote about the Yoga Alliance last week, where I talked about what major trade organizations could be doing and aren't. And insurance was on the top of my list. So today with Felicia, we're talking all about insurance, savings, and retirement. Because trust me, boring can be very sexy when you've spent an entire career without that kind of stability. Now, if you haven't heard, I wrote an article last week about the CEO pay at the Yoga Alliance that went a bit viral. And if you haven't read it yet, just head to my company's link in bio, www.thesunlightexperience.com/link in bio, and it is under the Start Here tab. All the links you need for me for this podcast are all right there. And if you are new to the podcast and found me because of that article, hey, welcome. I'm grateful you found us. Please make sure that you like, follow, or subscribe to the podcast from wherever you're listening. And if you're so inclined, share it with a friend. Now, let's get into it with Felicia Laab. Hey friends, welcome to Working in Yoga. Okay, so I think that there are maybe 5 times on this podcast where I've had somebody come on who I actually know from like real life, who we've sat down and had a conversation with. This is one of those 5 times. Welcome, Felicia Laab, to the conversation.
Thank you.
Tell everybody who you are and what you do.
I am Felicia, like you said. I am a small town Iowan girl who fell in love with business and business owners and just the way of life. I now am a mom of 2 little boys, 3 and under, so my life is crazy. But I also own 6 big businesses. And throughout those 6 businesses, I have had a lot of opportunity to meet some amazing people and hear some amazing stories. And one of the businesses that my heart is just absolutely in love with that I do every day is financial services. And a lot of that topic is cliche to most people, but what I do is actually really hones in on the protection for people and understanding what's going on in life, what could happen in life, and honestly sharing just the real life stories of my clients.
Okay, so I am mildly obsessed with this topic, and anybody who listens to this podcast is going to know that because, like, it's something that we don't talk about in the fitness and wellness space. And so, like, you and I were texting, as we do occasionally, and you're telling me this story of somebody who you met, and I want you to share that story on the podcast with the people listening, and then we're going to give them solutions. So tell me what happened.
So I had a current client reach out to me about a month ago and said, "Hey, I met this really interesting woman just on the street. I would love to give her your number." And of course, me being me, I love meeting awesome new people. And I said, if I can help her in any way, please give her my number. That turned into an in-person meeting a couple weeks ago. And throughout my meetings with people, I like to get to know every aspect of their life, why they do what they do, why they fell in love with it, etc. And throughout this conversation, found out that she actually started and owns a gym. She has been obsessed with the fitness industry. It initially started with just, heavyweight, body weight exercises, turned into a full gym with Taibo and yoga and just all the things. Um, and she actually came to me and she told me this insane story, which I texted Rebecca. And the story goes like this. She was working full time in her business, training, fit people who are in the gym, people who are doing all the things right, eating, hydration, everything. That's what she does all day, every day, also. And unfortunately, the reason that she came to me is because of her limitations that she now has. So she got a call from a police officer that her teenage daughter had been in a car accident. She was unresponsive and they were taking her to the hospital. And of course, she cancels all the rest of her classes for the day. She hops in her car and she's like, "Tell me where you're taking her. I will meet you guys at the hospital." And about 5 miles after she leaves her gym, she gets a head-on collision from another driver. So the mom is now in a car accident
Oh,
herself. Thankfully, she was buckled up. However, due to how the car had hit her and her seatbelt, she actually broke two vertebrae in her neck and three vertebrae in her back. So then she also had to be life flighted to the hospital. Thank God she said, "Take me to the same hospital my daughter is going to." But now, fast forward, she's meeting with me and she's going through kind of this midlife crisis of I'm mid 40s, and unfortunately, because of my neck and my back, I can no longer do what I love. And she goes, disability insurance is something that somebody talked to me about a long, long time ago. Maybe I heard it 5 or 6 times in my life, but I never did it. Right. She's like, it's nuanced. I'm in fitness. I do all the things right. I'm healthy. I don't need it. And she goes, I understand that now I'm probably uninsurable, which unfortunately I had to tell her she is, or she'll get
yeah.
really, really expensive insurance.
Yeah.
But she tells me, she's like, I wish I would have just done the nuanced, boring thing because she could have had income while she was out, right? She was out for 8 weeks total. Thankfully, she still had other people in her gym, other instructors helping run that. But she started the gym, like I told Rebecca, because it was her day to day. She didn't start it to run the back office and just be the manager. She wanted to do the fitness classes and be the instructor and all the things. And now she's like, do I want to continue in the gym? What does fitness look like now in my world? And it honestly turned into more of a conversation about advocating in that industry, advocating for people who, every day they do everything right. And then unfortunately, something that's out of their control just strips them of everything that they've worked for. So,
You said something I think that is really important for people to hear, and it is I'm going to do the boring thing. Like, I actually
yeah.
started some of my marketing this year being like, we just need to start being boring because
Yeah.
we're very dramatic as an industry. Like, fitness and wellness people, we are the drama. We tend to be the personality, especially if you're somebody who's like teaching classes in front of people. That skill
Yes.
set translates, you know?
Right.
And nobody's like pulling you off to the side being like, yo, you need to figure out how you're going to retire and you need to figure out how you're going to have insurance if something goes wrong. Like,
Yes.
okay, so life coach us into this decision. Like, if you had somebody in front of you who hadn't had this like crisis moment where she was like, oh my God, I'm uninsurable now because I broke all
Yes.
the things, what are you saying to them about doing the boring thing?
Yes. So the company that I am at is a company that I'm at for a reason. Like I said, the finance industry is so nuanced in itself, and there are so many people in finance. It's like, are you an insurance person? Are you an investment broker? Are you a retirement strategist? There's just so many people that kind of fall into this umbrella. And I think people just kind of assume everybody in our industry just manages the stock market, right?
Totally.
However, I joined Financial Architects, the company that I'm with, because of their sole purpose, and their sole purpose is protection first. And when I first joined that, I'm like, what does that mean? It seems very nuanced. And when I started going through the process with my clients, protection first is everything, right? Protection is anywhere from an umbrella policy to life insurance to disability insurance to do you have your wills and trusts done to all of the things that are so boring and so nuanced. But if you didn't have any of those things, we look at that as kind of the roof of the house. If you didn't have any of those things, it doesn't matter how much money you bring in because now you're no longer bringing it in, right? It doesn't
Yeah.
matter what your debts are because now you can't pay them. So everything kind of underneath those umbrellas, they don't work if you don't have them.
Yeah. Okay. We need more hand holding as an industry. I'm just
We all do. We're
gonna
all
tell.
batshit crazy.
I'll tell you that right now. I mean, partially, one thing that you said in the story that I think is very relatable to anybody listening. So
Yeah,
there's a story in fitness and wellness, especially yoga. So I'm going to talk to yoga people that we're going to do this until we die. In fact, like the people we look up to are doing this literally until they die, 80, 90
absolutely.
years old. Okay. Which on one hand, like I hear you all, and that's amazing and wonderful that we are all able to do that until you die, but you shouldn't have to. Like, you
Absolutely.
shouldn't have to work until you die because you have no other choice, because you have no retirement, no disability, and no way to stop working. Like, those two things are
Yes.
different.
Yep.
Um, so girly pop me this out for a second. Like, tell me what people aren't considering when they're thinking about these things. Like, what are they not seeing besides the boring? Because I think
Yeah.
everybody sees the boring first.
Yes. Traditionally, what we're taught in school or what we're taught as soon as you get a job is you get a job or you start a business, whether it's 9 to 5s or business owners. It's make money, save for retirement. Make money, save for
Yeah.
retirement. You get to
Yes.
65 and you can be done. And, unfortunately, the traditional finance everything just isn't working. And that's why we're seeing so many baby boomers go back into the workforce.
Yeah.
Um, it's more than just get a job, make money, and save for retirement. Like I said, as a protection first company, none of those things matter if you can't do them. And so the boring is yes, save X% in your 401k. Yes, make sure part of that's a traditional, make sure part of that's a Roth. If you have extra money, where do you want to put it? Those are the things that people know, but what they don't necessarily see is do I have the protection on the front end to actually protect those things that I have told I should be doing. And
Yeah.
honestly, the sad thing is most of those people aren't actually doing it. Or if they're doing it, they don't know what they're doing, right? Their employer signed them up for the 401k. They don't even know what percent they're putting in. They don't even know where it's going. They don't know their group benefits package, right? I just had a conversation with a group of physicians and they're like, yeah, I think I have some of that through work. And I'm like, okay, but could we look at your employee benefit package and just see what
Yeah.
exactly it's doing? And when I got them to realize they do have, a lot of employers do have group disability. Usually that only covers about 60% of their salary, and that's before taxes. So I said, realistically, you're probably taking home about 40%. You're used to living on, 80% of your salary. Could you live on 40? They're like,
Yeah.
oh, I had no idea. So part of my job that I love doing that is not the boring part is just providing education. I tell people all the time, if you have questions about anything, I'm happy to just take it, look at it, send it to somebody who's smarter than me if need be, and bring back all the information and give it to you. That way we can at least make a path. And it might not seem like traditional, but like I said, the traditional is not working.
Okay, so we're gonna like do a little bit of mini education for folks who are listening. So I
Okay.
want to bucket the first education in disability insurance because I promise you nobody has it. I have it. I had it,
I'm
but
proud of you.
I'm a little like I'm outside the norm of the industry,
Yes,
and
yes,
I solo parent, right? I'm the only person working, so I
yes,
have different considerations than people who are in two-parent households. So let's talk about disability first, and then
absolutely.
then I'm gonna have you give us some advice on business ownership and what business owners need to be thinking about, and what independent contractor solopreneurs would need to be thinking about so that we actually can stop working before we die. So
Sounds good.
we'll
Or you
start
die
first
before you
with
stop working, whichever,
right, yes. So let's start disability first. Tell us about that.
Okay, so disability insurance, there's a plethora of things that you can do. It depends on if you are 9 to 5, if you're a business owner, etc. But the very basis is, do you have a policy, yes or no? If you do have a policy, how much is it? If you do have a policy, has it been updated in the last 35 years? A
Yeah.
lot of people think about it when they're young and then they get it, and next thing you know, they haven't updated it at all. It's not something that follows your increase of salary. So when you initially get a disability insurance, it's based on the salary that day that you're making. So if you're making $30,000 when you're in your 30s, but now you're in your 40s or 50s and you're making 50,000, that additional 20,000 is not being covered. So just making sure that you are actually assessing, does my need match what I have? And I think that's the biggest thing with disability is, what is my need? What do I have? And are they aligning with each other? Like I said, every person is going to be very, very different. There's hundreds of thousands of carriers out there, how the policies are structured. Like, I'm not going to get in all of that jargon. Um,
Yeah. Yeah.
but the biggest thing is, do you have it? Yes or no? Should you have it? Yes or no? I mean, I think 95% should
She's
be
nodding her
yes.
head. Yeah, 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 yeah.
Yes, you should. If you don't, why? And if you do, is it doing what it should be for you if something were to happen?
Okay, so let's say something happens that isn't like a tragic car crash, which is horrible,
Okay,
and oh my gosh, I hope this woman and her daughter are all right. I like
they are. Thank you.
big hugs to them because
Yes.
that was traumatizing even to hear, let alone I'm sure
Yes.
to live through. So what other than those like wild, unimaginable events would disability insurance cover?
Pretty much anything. Unless you have some exclusion. So, like if she, in this specific case, if she would have had a previous back surgery, we probably could still get her insured. But what the insurance company is going to come back and say is,
Sure.
hey, because you had a previous surgery, we're going to exclude that. So, any disability or injury you have to your back, the payouts, we're not going to pay for that. That's common across the industry. It doesn't matter the carrier, they're going to provide those exclusions, right? If you tore your ACL, they're like, well, if you tear your ACL again, that's excluded.
Yeah.
But usually anything else, if it's any sort of injury that is impacting you from doing a day of work or 6 months of work or whatever it is, you can file those claims and get those payouts.
Okay, so how would we do that if you were like an independent contractor worker? Like so many people in fitness and wellness are where you're like most of us are doing what like patchworking our work. So you
Mhm.
work a couple classes here, a couple more classes here. So you've got to pull, you don't have like a salary to prove how
Yeah.
much you're making. Like how does that work for those types of people?
It gets a little bit more complicated. A lot of 1099 subcontractor people, we
Yeah,
have to send through different carriers to see who will cover them. Um, in all reality, they are a little bit higher of a risk for insurance
of
companies just
course.
because you could make zero or you could make 100,000, right?
Yeah.
Insurance company doesn't know what you're going to make. So it does take a little bit more to sometimes find a carrier to get covered, but it's the same thing. We would go in, we would look to see what can we get covered. I always am somebody that's like, apply for the most I can and bring it down versus going back and asking for forgiveness, right? I'm like, here's what we have, here's what we need. Let's apply for everything we can get, and then let's meet and figure out what our actual needs are. So it takes a little bit more time, it takes a little bit more finessing, but it's doable and it's important.
How much does like a policy cost typically? I'm sure you can give me a range. Obviously, it would be a range for most people, but
Yeah.
say you're like a wellness, fitness, yoga professional making somewhere between 12 and 50K a year.
A lot of it is going to be based on your age, your health, and your salary.
Okay.
So I mean, if you're looking at a 30-year-old who is just going to get like basic coverage for a salary of say 40,000,
Yeah.
depending on the carrier, depending on the riders that you want, depending on other protection aspects, you could be anywhere from 30 to $100 a month. I mean, you can have something super cheap
Very
or
reasonable.
you can have something more expensive if you wanted additional coverage. So it's
Okay.
very
So
reasonable
that's
in the grand scheme of things.
very reasonable.
Yes.
Um, okay. Like, give me your two-sentence pitch on why everybody needs disability insurance.
Two-sentence pitch. Now you're
Two
putting me on the
sentence pitch.
spot. Um, Honestly, the biggest conversation that I have, whether you're my client or whether you're just somebody that walks down the street, is you are going to leave this earth. Now, that's a conversation for where are you going, right? I'm not going to get into that, but everyone's going to leave this earth.
Yes.
And it's going to be death. Well, the other problem is some people physically stay here, but they can't do the things that they love. And usually that's because of a disability. And doesn't it make sense if we are fully bodied and able now to protect the unknown tomorrow? And
Yeah.
that's the biggest thing I tell people is if you're fully bodied and capable and able now, let's do the boring, let's do the non-traditional, let's get all of the nuanced out of the way because we have no idea what tomorrow will bring.
Before we keep going, I want to tell you about something I built because it didn't exist and it should have. Inside Yoga Magazine is a trade magazine for yoga professionals, not a wellness lifestyle blog, not a beginner's guide to down dog, a trade magazine, the kind that treats our work as the legitimate profession it actually is. It's digital, it's ours, and it's the first of its kind. If you've ever picked up a trade publication in literally any other industry and thought, why doesn't yoga have this? Well, now it does. You can find it at InsideYogaMagazine.com. The link is in the show notes. Okay. I like that. I mean, it's very true. Like we do, like it just makes sense to protect yourself.
Yes,
Here's my one sentence pitch to anybody listening is that if you take your job seriously enough to put time, effort, and energy into getting better at your job, you should put time, effort, and energy into making sure that if something happens, you're still okay because you matter as much as the work that you're trying to do. That's my
absolutely.
one sentence. That's my one sentence pitch to everybody listening. You matter as much as the work you're trying to get better at. Let's talk about okay. So this woman, she's a very fascinating case. Let's talk about business ownership during this time because some of us, like myself, when I own my studio, own like proper brick and mortar businesses or even like digital businesses.
Mhm.
What other things do we have to be thinking about besides like disability that means that we can perform our job? Businesses have other things they have to think about too.
Yes. The biggest thing that I talk to my business owners about is everyone who's figuratively in your life, so the or the professionals, so attorneys, CPAs, financial, bank, etc., everyone in that wheelhouse, are they working together for your goals? Usually what I
Hey.
see is, we have these 7 to 9 people and they're doing their specialties, but usually those don't align with what the business owner is trying to accomplish. So the biggest thing we try and do at our firm and at our agency is say, figuratively, if we could with our software get all of those people in the same room, would they be working towards the same goal that you have personally, but also professionally? And so we want to make sure, you know, is your accountant looking at your books prospectively or are they looking retrospectively? Sometimes one makes sense, the next year the other one might make sense. Do we have your coverage? Is it you? Do you have kids? Do you have a spouse? Do you have overhead? I think a lot of times business owners, they start their business, and speaking from experience, you start your business and there's just so much going on and
Yeah.
you just try and get the very basics in place. And then next thing you know, you're 15 years down the road and you're like, I haven't looked at those things since I started on day one. And
Yeah.
so the biggest thing for my owners is let's look at everything you put in place on day one. Let's just give it a fresh set of eyes and see what needs to be maybe changed or modified or adjusted so that we can make sure that everyone and everything is still working towards the goals that you have. It's a
Yeah.
large blanket statement, but it's so important.
No, I mean, like when you're saying that, now I don't own a brick and mortar anymore. My business is digital, so all of those aspects are different. But like brick and mortar, especially, you're right. Like day one, week one, you're like putting all those things in place. And I
Yes.
literally never thought about them again until like
Yeah.
something happened where I was like, oh, my insurance, like my old accountant went up like 70% for her fees. And now I'm like, oh, rats, I've got to find a new
Yes.
accountant because I can't
Yes.
afford it anymore. Like that's such good advice. Like I could have used that advice when I had a brick and mortar space. So like, okay, so we've got accountants, insurance people, lawyers. I'm sure, like, who else are we looking at to like make sure everything's up to date, like policy wise, for like your our business owner people?
Um, yeah, anybody in banking, mortgage
Banking, of course.
lenders, depending on buildings and what you have for your business, real estate professionals, real estate brokers, really any piece of paper that you have gotten in your business to start your business is something that you should be reviewing every 2 to 3 years. And a lot of times I run into that with my business owners, especially when they're getting ready to retire, or even, like you, Rebecca,
Of
you
course.
sold.
Yeah,
A
yeah.
lot of times it's I'm just going to sell to the top bidder, but sometimes it's what makes sense. How do I sell it? Who should I sell it to? What should that structure look like? And making sure you have all of those players in the room at the same time is very, very important.
Yeah. I mean, I really didn't look at any of those things after I set them all up. And now I'm definitely going to do that in the future now. Digital is very different.
Yeah.
Okay. So what else? Is there anything? Okay, I have two questions. One is there anything new for people who might be listening who own businesses? Is there anything new that happens to be coming up like in 2026 where you're like, yo, this is new this year and you should be paying attention to it? Do you have any of those like tips for us?
The biggest one I would say is if you have student loans, there's a big student loan change coming July 1.
Ooh,
I don't have a lot of details and specifics on it. It is going to affect federal loans. So that's something that we watch very, very closely is the student loans and what's happening with them.
yeah,
That is a big one that's going to be coming out soon. Um, the other one, I mean, the market's going up, it's going down, more companies are coming out,
yeah,
public. If you're a big stock investor, look out for those. Like SpaceX just became public. Stocks are shooting through the roof right now on those.
yeah, yeah.
Otherwise, not really. We're kind of still in that environment of people are very unsure. People
Yes.
are kind of unsure of what's going to happen. Our price is going to continue to go up. What is inflation doing? What's the economy doing? We're still just very much in that macro mindset. So my biggest thing is if you just want to have a conversation to look at everything, just have that conversation. I'm somebody who I don't charge consultation fees because if I can't provide a value to you, I don't want you paying me for that. So,
Yeah. Okay, so I mean that's a good, and you may not have an answer to this question, but like I'm thinking of this is what I was thinking about in 2024. It was pretty clear that things were going to be shifting and changing economically speaking. Like that was very obvious to me.
yeah.
Um, Especially in fitness, wellness, yoga spaces where we are an extra, right? We're not like selling toilet paper that people desperately need.
Yes.
We're selling something people are cutting out of their budget when everything feels tight.
Yes.
So, if you had businesses that were like that, that were in that industry, what are you telling them to do when you're like, all right, buckle up, here we go. This might be another time when you're going to lose, long-time clients and things like that because we're in sort of this time of economic uncertainty. What can people do?
Um, I feel like that's a double-edged sword, right?
Yeah.
You don't want to try to put out a fire that's already burned multiple houses and spreading throughout your neighborhood. If it gets to that, there are
Ooh.
things that we can do. My biggest thing when I talk to business owners specifically early on or who are, within the first 10 years is business, you're going to have really awesome highs and you're going to have really crappy lows. And I think the biggest thing to remember is that a lot of times we're always told, keep your money here, keep your money here. And I just want to make sure that my business owners are staying liquid. They have accessible cash. They can get accessible cash if they need it. My biggest recommendation to people is if you don't have a really good relationship with somebody at your bank, put time and effort into building that relationship because when you need money, they're going to be the first ones to say, hey, we have a relationship with you. We're going to help you get through this. So the
Yeah.
biggest thing for me is just have those really, really strong relationships with your, financial professionals, your attorneys, your CPAs, your banks, but also make sure that you have cash in places that are liquid. A lot of times, unfortunately, people have stuff locked up in, Roths or 401ks
Yeah.
or all of those avenues that are traditional. But when it comes to those dips in business, that cash isn't accessible or it is for, fines or fees and
Yeah.
taxes. And so we just want to make sure that you have a good, even approach to every aspect of the business.
Okay, that's such good advice. That's advice that I have given so many people too. I think especially so you're a women entrepreneur, I'm a woman entrepreneur. Like
Mhm.
we're often not in the places where deals get made. I don't golf, for example.
Yeah, yeah.
Like I think you might golf. I don't golf.
No, I
So
played softball.
okay. So like one thing I learned in like 2021 when things were
Mhm.
like COVID crazy and wellness especially was that my banker took me out to coffee and then like every 6 months we just like we would go and have coffee. And then
Yes,
when something came up, my banker would email me and be like, "Hey, have you seen this grant? Hey, you can apply for this. This would apply for your business." And I
yes.
was totally like, "Is this how it is for guys the whole time?" What is happening? That's so, I mean, like from my experience, I would say that's such solid advice. You
Yeah.
want to have access to people who have access to money.
Yes. Yeah.
Okay.
90% of what I do is just so nuanced. It seems so boring and common sense, but unfortunately, 90% of the population just doesn't do it or they don't want to have the conversation.
Yeah. Okay. Um, Give me three things that people can look at today or in the next month that would be like, hey, so these three things, top three priorities. If you
Mhm.
can't fit in conversations with all seven people and talking to a banker feels awkward, give me like three things somebody can do right now
Okay.
or say, I'm going to put them on this list to do to help get yourself more secure, I guess.
Yeah. Number one, if you have a family, make sure you have wills and trusts done. Um, that's going to be my number one. I'm not even an attorney, right? I don't even get paid for that. But unfortunately, there's so much that's just unknown with what happens and you don't know what's going to happen and just making sure your family is protected from a legal standpoint. So number one, wills and trusts, make sure they're done, make sure they're updated, make sure you're looking at them every 2 to 3 years. Um, Number two would be where is your money and what is your money doing? Again, this is something that most people are like, oh, I just have a checking and savings and a CD, right? But
Yeah.
it's where is that money? Is it accessible if something were to happen? If it isn't, how would you have to access it? And if you can't access it, if that's a problem, what are other avenues or places that you should put money? Um, so yeah, the wills and trusts, where your cash is and what it's doing. And honestly, the third one is the protection. I would make sure if something happens to you today, can you afford your bills?
Yeah.
Can, you continue to buy groceries? Can you afford your mortgage? Are you a single income household? Are you not? You had this plan of saving X amount for your children every month. Now that's on hold. Like, if your income stops, are you okay? And do you have measures in place to be able to replace that?
Yeah. Oh, okay. Really good advice. Um, can we talk about retirement for a second and specifically retirement from people who have zero, say, hypothetically speaking, access to a 401k? Like how, again, like I think we should probably be talking about other options besides work until death. Like what
Yes.
can people be doing?
Yes. The biggest thing that our firm talks about is we have to get to a point where we're saving 15 to 20% of our income. Now, this is completely unrealistic for some people, and I do understand that. And life happens. Some months you're going to save 30%, and some months you're going to save negative 10, right? Like
Yeah, yeah,
it happens. But if we can get to a point where we're consistently saving, the biggest slogan that we talk about is right now in today's world, it is, and I got to slow down so I say it right. We have frictioned saving and frictionless spending. And what that is, we have cards and we want something and we tap, 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 especially with Apple Pay, right?
yeah,
But it
yeah,
takes so much effort to save a single dollar, especially if you don't have access to a Roth or a 401k through a company, right? Those are automatically coming out of your paycheck. The
yeah,
biggest problem in today's world is people get all the money and then they're forced to actually have to put it somewhere. And that's where that friction is.
Yeah.
So the biggest thing is we need to talk about having three buckets of money. You want to have a bucket that you maybe can take a little bit more risk, but the certainty of that money being there is a little bit less. You want
Yeah.
to have a bucket where you take a little bit more or take a little bit less risk, but no matter what, you know that a certain amount of this money is going to be there. And you want to have a bucket that is minimal tax, minimal risk, no matter what, like that's your saving grace if the other two fail. A lot of times in the industry, it's just have two buckets. Here's your retirement. Here's spending while you're living, right? And
Totally.
unfortunately, we spend a lot while we're living and we're like, oh, we'll get to retirement. We'll get to retirement. We'll get to retirement. And you get to retirement and you have less than $500,000 saved and you're out of the workforce for
Yeah.
12 years and you go back in after 12.
Yeah. Okay. Okay. Can I ask you this then? Like
Of
now
course.
you're just life coaching me. Which really, if you don't know, that's what this podcast is people come on and
Absolutely.
life coach me. Like, what do I need? Okay, so I do have at one point I was like, I will get no social security. I've been working for myself truly since I was 22 in some capacity or another. I'm a
It's amazing.
terrible employee. And I just learned early on that I need to be in control of a lot of that.
Yes.
So I did find out I will get some social security. God
Woo-hoo.
willing, I know, right? It's like $1,000 a month. But the only
Yeah.
reason I have it is I started working at like 14 for
Yeah.
Hy-Vee food stores. So I did have like, 8 or 9 years in there.
That's
So
amazing.
I do have some social security. How much do we need to save for retirement so that I'm not like sleeping on the floor of my kids' houses?
Yes. If that is your goal, that absolutely can be your goal. But for people who don't want to sleep on their kids'
Yeah.
floors, honestly, again, that's such a gray area because it depends on a lot of a lot of what the industry is going to say is, like the Dave Ramseys of the world, it's consider spending 4% of your income, right? You're going to spend 4% of your income, or you could take 4% of your income and that's what you could live on.
Right.
Um, what you really need to do is look at the opposite. So you need to you're not going to know for sure, right? We're not going to know what the taxes are going to be in a year,
Yeah.
let alone in 30. But you need to kind of think, okay, if the tax brackets are here and I'm living off of, let's just say $10,000 a month, am I going to be living off of more money or am I going to be living off of less money? Most
Right.
people are not going to say, I want to live off less money when I retire, right? Most people want to travel, they want to buy a beach house, they
Yeah.
want to, do whatever. Most people aren't spending less in retirement. They're usually spending the same, if not more. So we want to say, what are you spending a month? Take that times a year. Now take that times realistically 30. Will you live for 30? I don't know. But if you
Yeah.
do, we want to make sure that you have that cash to live for the next 30 years after retirement. And we want to make sure, again, that it's in places that you can pull from all three of those buckets to maybe help lower a tax bracket. Or, if the biggest thing that I talk to my clients about is if all you have is a 401k, for example, which again, like you said, a lot of people don't have access to, but
Yeah.
this is the easiest example. If you have a 401k, you are relying on that 401k in the stock market to do really, really awesome things
Yep.
so that when you get to retirement, you have a big pot of money. Well, what we don't consider is say the year you get into retirement and you want to start pulling that money, what if the market's down 20%? Now you're pulling 10% out to live on and it just dropped 20%. So now where is that bucket of money and how much has it dropped and will it recoup? So we
Yeah.
want to make sure that we have accessible cash and we want to make sure that it's enough. Now the question is, what is enough? I can't answer that unless I'm looking, specifically at somebody's, what they have, what they make, what they live off of. But the question is for most people, if I get to $1 million, will I be okay? And the realistic answer is maybe you
Yeah.
might, but the other answer is $1 million today might seem like 200,000 in 10 years.
Yeah.
The time
I
value
mean,
of the dollars.
and based on where people are located too, like if you live where we live, which is a
Right.
great state to retire in, because the
Absolutely.
cost of living is so low, then yeah, you likely will be okay with like
Mhm.
$1 million. But if you're in California, that's a way different conversation. If you're in New York, that's a way different
Right.
conversation.
Right. Yeah. That's a hard question to answer, but we tend to look at it the opposite of the industry. We want to say, how much are you going to need and how can we get there? Not let's just set a number now and assume you can take 4 to 6% of it.
Yeah. Okay. So let's say I'm going to give you a hypothetical person,
Okay.
um, who actually is not me. But let's say like you're somebody who's 40 years old and
Yeah.
up until this point, because fitness, wellness people have no access to easy retirement. And that actually isn't even just us, it's gig workers in general. We're bucketed under gig workers. From
Yeah.
what I've seen, no country really deals with gig workers very well. Like even countries that have set retirement schedules don't deal with gig workers the way that they should be taken care of. So let's
Yes.
say you're a 40-year-old gig worker, you have zero for retirement. What do? After you've stopped panicking and gotten your disability insurance, because get your disability insurance, it doesn't matter that you can't
Yeah,
retire if you can't work between now and then. Um,
absolutely.
what do you do now? Like, what are we thinking about as like a 40-year-old gig worker?
I think the biggest things to consider are if you have not saved up to this point, why? So much of money is psychological. If you haven't read the book, The Psychology of Money,
Love that
um,
book.
fabulous book. And honestly, you figure out so much about yourself and maybe why you have the perception of money that you do.
Yes.
Maybe it's how you grew up, maybe it's past trauma, everyone kind of has their own experience. But I would say the biggest thing to figure out is why you haven't saved. Is it psychological? Is it because, like I talked about, is there some barrier in the way? Like, the more that we can automate savings, the better. So, my biggest recommendation would be determine where you want your money. And that doesn't just mean what stock do you want to buy. That doesn't just mean what CD is doing the best right now. Like it's good to have diversity. It's good to have, some that is locked up that you can't touch, that's going to get a better rate, some that you can touch, but it's still getting a good rate. A lot of the issue right now is people are just like, I'm going to put money in my savings account. And the problem with the savings account is that it is not a good savings bucket because they just push a button
Yeah.
on their phone and they say transfer to checking. It transfers to checking in zero point 0.7
Yeah.
seconds and you tap your card and you use it,
Yeah.
right? We have to have other buckets that are still accessible, they're still liquid, but that it's a little bit harder to touch, but that we can automate savings too. So the short answer, automate your savings and determine how you can start saving if there were issues in saving before. And then honestly, my biggest recommendation is to meet with somebody and figure out how much are you making, what can you be saving, where can you be saving it, and once you determine where that money is going to go, what is it doing? I think the biggest problem in society we have right now is we go to a professional and we say, "Tell me what to do."
Fix it.
Yes,
Yeah.
and I want clients to know just as much as I do. I want them walking away feeling comfortable with the plan and with the strategy, not just, "Hey, you should invest in these 6 stocks. Here's the rate of return they're going to get. Thanks, great. Have a good day." Shake your hand and walk out, and they have no idea what the heck their money's doing, right? I want them to know what their money's doing.
Okay, so this is really good advice. I have like one final question that is maybe a big question, but I do want to say like that's really important. Actually, this year I knew for my channels for the podcast and the magazine,
Mhm.
I was going to start talking more about like money and retirement. And
Yep.
in January, the thing I did, I was like, well, I know some, but I don't know enough. So I just read like this is a very me story, but I read like 27 books over the course of
Oh
two
my
months
gosh.
about money. I
So
just got
you.
every book that I could. And I was like, I'm just going to know so much now so that I
Yes.
have, at least if I'm absorbing even 30% of that content, I know
Yes.
I have so much more confidence now that I did even in January. And I was no slouch in January and I still wanted to
Right.
know more. Okay, so your final piece of advice for people was go talk to a professional. So now you're going to like be our therapist because the thing that you brought up, there's so much shame that is surrounded by a lot of people who are talking
Yep.
about money. That
Yep.
was definitely me and my family. Like I had to do a lot of work around money and shame.
Yep. Yep.
How do people do that so they don't show up in your office crying? I mean, maybe they
You
do.
know, sometimes people
I
still
bet they
cry.
do. I bet they do. Yeah.
My, honestly, if the listeners leave with one piece of advice, it's you should be interviewing everyone that you talk to. We are very much in a culture of I use so and so accountant because my mom did and my grandma did, or I use so and so financial advisor because they're my best friend's mom, or something like that.
Yeah.
And my biggest piece of advice is you should spend just as much time interviewing the person that you're going to work with to make sure that you're getting the service that you need. That's my biggest component to business owners, to non-business owners. The first time you walk into an office and you sit across from somebody, because this was my experience, right? When I was young and naive, I walked into an investment broker's office and I was like, I'm doing the right thing. I'm going to save money. I'm going to be risky because I can, because I have the
Yeah.
timeline. And I walked in there and I was like, here's my goals. And he's like, cool. And he shows me this graph and he shows me all these stocks and it has this cute little line. And he says, here's the average of what you're going to get. Does that make sense? Great. How much you want to start with today? And I left there so confused. I was
Yeah.
like, but what is my money in? Is it going to make that? Is that guaranteed? Is that before taxes? Is that after taxes? Like, how does that look in my whole portfolio? Right. And I realized I should have asked more questions. I should have aligned him to my goals. And that's my biggest piece of advice is whoever you're going to work with, whoever you're going to put that time and money into, make sure that they are aligning with what you want to accomplish.
How do you find that it's common that people will use shame as a tactic to get sales in financial spaces? Because there's a lot of, so I follow a ton of people so on social media that are giving
Yeah.
financial advice. This is unsurprising. But some of them use shame as a sales tactic, which I mean, we should be all familiar with in yoga and exercise and fitness, because guess what? We do the same thing.
Emotion is everything.
Yeah, yeah, yeah. How are we watching out for that in the financial space? Like, can I get my coffee latte? Like the Dave Ramsey, like, don't get your coffees once a week. You'll never be able
Yes.
to afford anything. You know that. You know, like you know he's like that.
Live off of rice and beans and you'll be fine.
Yeah.
Um, the biggest piece of advice that I can say is there are going to be tons and tons and tons and tons of influencers in social media. There are going to be tons of people, even at brick and mortar, banks and financial firms that are like, hey, we have the best products, we have the best solutions, we have the best whatever, X, Y, and Z, you name it. And I think the biggest thing to know is what is that person doing for you? And if they say that they're different from other people, have them show you how, right? Most
Yeah.
people, most places, they all have access to the same things or to many of the same things. Like most of the people can do what everyone else can do. But I think the biggest thing is to educate yourself before going into those places. Like I said at the beginning, there's a lot of people under the financial umbrella. Um, and most of them are very different, right? I have a lot of conversations with people that are like, "Oh, I didn't think I made enough money to come work with a financial advisor."
Yeah.
Or I have a advisor, and then I get into the conversation of what is that advisor doing for you? And they're like, "Oh, yeah, I have a couple accounts at Morgan Stanley." And I'm like, "Okay, so you have an investment advisor." They're like, "Yeah,
Yeah.
but don't they do everything?" And it's like, "Well, no, and here's why, or here's what that means."
Yeah.
So the more that you can educate yourself and the more, I mean, honestly, I applaud you for reading 27 books because one, that's a lot, but two, you probably learned so much, not only about money, but also about yourself and your personal relationship with money.
Totally. Yeah.
Yeah. And
Yeah.
that's the biggest thing is the more that you can learn about your relationship with money and why it is the way that it is, and then find somebody who can help you and what you need, not just sell to you.
Yeah, that's such good advice. I mean, like you said, the book you brought up, The Psychology of Money, I think was one of the best that I read over the course of
Amazing.
that. Mike Michalowicz put out a new book, which was essentially so Mike Michalowicz did for businesses a
Mhm.
system called Profit First. And he
Yes.
essentially built the same thing for personal and like your personal finances. And that book came out this year. That was
Yep.
very good. His writing's really easy to follow too. I think those would be my two favorite.
Yes.
Um,
Happy Money is also a really good one if you want to read that one.
I've not read that one. Wait, hold on. I'm
Yep.
writing that down. Happy Money.
Yeah, and even if, I mean, I'm sure you'll put my contact information below, but even if
Yep.
people want to email me and say, "Hey, do you have good book recommendations?" Because of compliance, I can't just put all of them out there, but if people want to reach out and say, "Hey, I want to, 3 to 5 new books to read," I'm happy to provide those
Yeah.
resources.
Okay, so speaking of, tell everybody how to get a hold of you so they can do like literally exactly that.
The best way is honestly through email or through my phone. You can call me. I have a business line, so you can text me. Those are the easiest ways. You can find me on Facebook, LinkedIn. Um, those are my 2 business pages. I also have a website. It's currently down for compliance dealings.
Yeah.
We're doing a whole website revamp. So when it comes back up, it'll be amazing. But once that comes up, I'll also have that. But right now, Facebook, LinkedIn, just shoot me an email. Honestly, the
Amazing.
best thing. I love connecting with people. So,
Okay, this was so good and exactly what I think people need to hear.
well, thank you for
So
having me.
thank you so much for this.
Yes.
Thank you so much for this conversation, Felicia. When Felicia reached out and was like, I had this crazy story happen the other day, and I feel like you'd want to talk to your podcast people about it, I was so excited to hear what she had to say. Protecting ourselves and our livelihoods is important, especially since nobody else is going to do that for us. Now, next week on the podcast, I have Andrew Tanner up, and he's going to tell us all about the American Yoga Council. I do enjoy learning about how different organizations are run and what they can offer us. This is an episode that lets you hear from them what they have been doing and what they've got going on, and then honestly, you just take in that information and you decide what to do from there. And next Monday, I have another in my Through the Looking Glass series that is breaking down the trend report that I did from late June. We're talking about the yoga industry's data problem. Now, until then, let's go get to work, and I'll catch you around the water cooler next time.